It's Friday, July 17th. I'm Brian Walsh, and welcome to This Week in Impact, where I talk with ImpactAlpha journalists and editors about some of the most interesting impact investing stories we've been covering. This week, I'm joined by editor David Bank. We'll discuss It's Getting Hot in Here, so we'll look at cool tech, investors seeking sustainable solutions to help billions beat the heat. Plus, it's the liquidity, stupid. Why impact LPs and GPs are finally buying and selling stakes in the secondaries market. And finally, we'll debrief this week's call, which asked whether faith-aligned investors can become known for what they're for, not just what they're against. That's all coming up on This Week in Impact. Hi, David. Welcome back to the podcast.
Thanks, Brian. How you doing?
Doing well. Now, you're in California, so have you avoided the smoke from the Canadian wildfires that's been choking the Northeast where I am?
Yeah, well, we're well-versed in smoke from wildfires, but this time it's your turn, Brian.
All right. Well, speaking of weather, first up this week, it's getting hot in here and out there. As global temperatures rise, breaking records across the world, climate investors have largely focused on climate mitigation, things like renewable energy, electric vehicles, other solutions for a low-carbon economic transition, rather than how to adapt to life on a warming planet. Our Jessica Pothering this week looked at cool tech, the startups developing new approaches to help billions of people around the world beat the heat. David, tell us about the growing need for these type of technologies and how investors are looking at this from a sustainability lens.
Well, I think anybody who's baking in the heat, whether it's in Europe or in the Midwest or in the Northeast, understands the need for it. There is obviously an AC industry around the world and cooling technologies. What I think is coming into focus now is the need for sort of broadly accessible, broadly affordable, and obviously sustainable cooling technologies, kind of for the 1.5 billion Indians. I think only 10% of Indians have any kind of air conditioning. And sometimes, it gets to 40 degrees Celsius. That's about 104 Fahrenheit. In some cities, it's, hitting 50 degrees, which is more like 122 degrees Fahrenheit. And so the notion that that there's going to be a need for all kinds of cooling technologies. Obviously, a lot of passive, building construction, trees, shade, but also ways to cool the air without even further frying the planet with the emissions and the refrigerants. The materials that go into a lot of cooling technologies can themselves be harmful. So, the need for the AC can also exacerbate the very problem. And that's what this kind of new investment category is trying to tackle.
Now, with the exception of heat pumps, cooling solutions for things like homes, buildings, and logistics and urban applications haven't really generated the same level of investor enthusiasm. So, what's different now?
Well, the first thing to say is that, except for heat pumps is a big except. I mean, heat pumps have been growing very fast, even after the end of subsidies here in the US, but around the world, it's a very kind of proven out technology, and I think has surpassed, other kinds of furnaces and that sort of thing. The nice thing about heat pumps, of course, is they not only keep you hot, but they keep you cool too. And we actually just had one installed last year in our house here. The other kinds of things that are coming to bear are kinds of new kinds of materials in, I guess you'd call them air conditioning units, but different kinds of refrigeration systems that have very sustainable materials. There's all kinds of innovation going on that makes these things much more affordable, sustainable, use much more common materials. Our reporter Jessica Pothering focused on a new fund called Cool Pact Capital that is looking to India, and particularly all the startup activity in India around this, because, as I say, there's the need there, and there's also a very vibrant, tech and innovation community in India, as a way to sort of source and identify these new kinds of solutions.
Yeah, and so the obvious kind of revenue stream there are energy cost savings for kind of cooling improvements and upgrades. But what are some examples of some of the companies or technologies that Cool Pact is looking at?
Well, not just in India, but there have been a smattering of investments that we've been tracking at Impact Alpha. There's a company called Mojave, which makes energy efficient AC units, focused on cooling through dehumidification. Fifth Wall and Earth Venture Capital backed them. There's a new company out of Moldova that has a solar powered building cooling system, it's called Energy Solaris. There's another startup spun out of a research institute in Germany called Curie, with a Q. It has something they call electrocaloric refrigeration systems that don't require refrigerants or noisy compressors. There's salt-based liquid desiccants. There's other units that don't rely on vapor compression, which is very energy intensive. So it's kind of like, many other beats we cover, think batteries or other kinds of things. Once the demand and the investment cycle gets going, the labs, the research universities, other things have a lot of new innovation sitting on their shelves, waiting to get out. And so I think the key now is sort of commercializing some of these innovations that people, have already been developing and hacking on their own, perhaps to cool their own houses or their own buildings.
And that kind of R&D and that kind of hacking does require more capital than tech startups, for example.
Well, that's true. I mean, these are hardware, but people are wanting hardware solutions now. These are kinds of investments that can't be undercut by AI. In fact, AI is driving a lot of it because a lot of the cooling technologies are being deployed in data centers, which have a big need for cooling.
Yeah, I would say that AI is driving this on a couple fronts, not just the one you mentioned, the need to cool the data centers, but also the data centers themselves, which are putting more of a strain and causing more of a demand for electricity, which is requiring new innovations to make more energy efficient cooling technologies in other areas of the energy sector.
Well, that's right. I mean, you have this big burden of the AI on the electricity demand. You don't want to now, double that with AC as well. And this is going to be, important because I think there's going to be popular or even like populist demand for air conditioning. I know I was just in Europe, in France, and it's becoming a campaign issue, to bring in AC into old buildings that were built more to keep people warm than to keep people cool, and it would absolutely overload the grid and increase emissions and all the rest. And so you do need to have now a way to both keep people cool, but keep emissions down and keep electricity use down.
All right. Well, to go deeper on this hot topic, you can read Jessica's full piece on cool tech on impactalpha.com. There's also a link in our show notes. Later in the show, we'll discuss whether faith-aligned investors can become known for what they are for and not just what they're against. But for now, we'll take a quick break. When we come back, it's the liquidity, stupid. How the need to recycle locked up capital is leading more impact LPs and GPs to participate in the secondaries market. Next up, amid a prolonged exit drought that has some limited partners antsy to recoup their capital so they can redeploy it, our Amy Cortese reported this week that more impact LPs and GPs are coming to embrace the secondaries market. That is, both buying and selling stakes in private funds and companies before traditional exits materialize. Now, David Prequin reports that private equity secondary funds raised nearly $30 billion globally in the first quarter of this year, and they suspect that assets under management for these funds could reach over $1.3 trillion by 2030. It seems as if the secondaries market is well developed in traditional private equity, so why are impact LPs and GPs only now beginning to show an interest in them?
Yeah, well, the liquidity crunch, is hitting impact LPs as it is others. There's been a sort of slowdown in M&A activity. There's obviously been a slowdown until recently, and the IPOs have become another path to liquidity. SpaceX, for example, actually is in several portfolios that we know, and the proceeds of that IPO, may solve the liquidity concerns, as will maybe the Anthropic IPO coming up. But the more short-term way to get your money back is to sell your stakes. And so a kind of market has developed. And there's both, it's interesting, there's both buyers and sellers, with impact theses. And so the sellers say, I'm going to sell this stake and I'm going to get my money back, maybe take a haircut on the valuation because there is a discount usually you have to take if you're, getting out early. But I'll be able to redeploy that money and thus, support new managers and thus new ventures and kind of get the wheels turning again on actually delivering some impact. The buyers are saying, hey, I can take that discount. I can get into some funds. Now the funds, of course, they've already deployed the money, so you can see what the portfolio is. You can see that those are the kinds of companies you want to have. On an impact basis, on a returns basis. It's a quicker path for the buyer to their own exits because you're now a few years into the fund. So it's kind of a classic market question, which is, both sides have interest in this, and it's starting to become a little more liquid in the market. There are more buyers and sellers, and we've started to identify, some of these deals that are happening. Gratitude Railroad, for example, that was an asset manager and a kind of impact network that we've been tracking along with, has actually gone out to some 40 GPs and said, do you have any LPs that want to sell? And they actually picked up a couple from a manager called Unshackled VC that backs early stage impact focused startups that have immigrant founders. And it was a good fit for Gratitude Railroad, and it was a chance for Unshackled to let some of their LPs get some of their money back.
Or what about the concept of additionality? So for many impact investors, they say that their additionality is part of the impact that they have. And when you're talking about the secondaries market, you're not adding new money to any individual companies. You're, either it's an exchange between investors themselves, much like the kind of public stock exchange.
I think the broadest answer is, the presence of a market like this is itself, a form of additionality in the sense that if there is a way for LPs to get out, then more LPs might get in, and that encourages capital to come in. And you've directly increased the liquidity of your counterparty so they can go and invest in new funds. So I don't think anybody would argue that it's the highest, impact directly, but it's a sort of sign of a maturing market that does allow for investors with different kinds of time horizons to sort of move in and out more comfortably, and that sort of lubricates the whole thing.
And that feeds into this perception of the market that perhaps secondary markets suggest adverse selection, in which LPs are only unloading or offloading their underperformers, and they're keeping the good companies and the good investments on their own balance sheets.
Well, that is certainly actually true in some cases, but it doesn't necessarily have to be true. It's just what's a fit in your portfolio, where do you stand in the balancing, all these kind of financial considerations that investors have to take into account that are just kind of the bread and butter of managing a portfolio. And essentially that's what a marketplace is supposed to do, is to price those kinds of things. Now, you do have to take a discount to what's called net asset value, NAV, when you sell early, that you're getting your money now, so you take you pay something for that privilege. But it's an interesting, the math is kind of interesting. We had one fund manager who is selling some ed tech funds that he said have sort of generally underperformed. He had committed $20 million. The three different managers had drawn down a total of 10. He sold, or he's looking to sell them for about $7 million, so a 30% discount. But his math was that he gets his $7 million and he frees up that other $10 million that had been committed on his balance sheet. So now he's got $17 million to invest in new things. And so the discount he had to take to his original investment is worth it to be able to go look for funds that may have more impact, more return, and just better fit what his strategy is now.
Yeah, and one person's discount is another person's premium, and the old saw about where you sit depends on where you stand may also apply to where you sit depends on when you stand, like what your time horizon is. And different investors have different time horizons that they need liquidity for, so they could be perfectly
exactly, and that's what a market is. That's what a market is for, to be able to match buyers and sellers and let everybody manage their portfolios the way they need to, and that is a sign of the impact investing marketplace becoming more mature and, as you say, moving towards the kinds of mechanisms and instruments that the mainstream financial markets are very comfortable with.
All right, well, you can read Amy Cortez's piece, Liquidity for Sellers, Discounts for Buyers in Budding Impact Secondaries Market on ImpactAlpha.com. There's also a link in our show notes. For now, we're going to take one more quick break. When we come back, why for these investors, impact is a matter of faith. Finally, this week, David, you facilitated our latest call, which was focused on crafting a positive agenda for faith-based investors. Even more so than other calls, you've seemed genuinely moved by the conversation this week. So talk me through what you learned.
Yeah, well, if for starters, if you think about sort of the pools of capital out there that might be naturally aligned with impact, you'd think that religious orders and faith-based traditions would fit naturally. You know, people want to love thy neighbor and everything else. But to the extent that it's been aligned kind of at all, it's been really working with kind of negative screens. You know, screening out firearms or tobacco, and not really in terms of what folks might proactively want, what we might think of as impact investing. So the call was about making that shift. There had been a meeting this spring in Paris called Faith in the Common Good that brought together leaders of quite a number of different religions to think about sort of how to create models and frameworks for folks that they can adopt. Impact Evaluation Lab's Terry Keeley was there, and he worked with Jean-Baptiste Defrançois, who until recently was the president of what's called the Institute for the Works of Religion, better known as the Vatican Bank. And he described his role there as the Vatican's banker. Here's what he had to say.
My office, the office of the president of that bank, is exactly 3 floors down from the window where the Pope appears for the Angelus on Sunday. And I used to say that the Pope would appear and deliver the speech that he delivers at the Angelus and says a number of things about the world, some of the challenges that exist out there. And historically, on Monday morning, the team would come and do exactly the contrary in the investments we made and said the day before for the Angelus. So one of our key driver was to really build a faith-consistent investment approach for the Vatican Bank. But
so who else was on the call, David?
Well, Sovereign Capital's John Coleman. It's an asset manager focused on Christian faith investors, and they've developed with Terry Keeley and the Impact Evaluation Lab kind of metrics for human flourishing for both fund managers and portfolio companies. But also we had Sister Sue Ernster of the Franciscan Sisters of Perpetual Adoration in Wisconsin, which has really leaned into this. She told a powerful story about the disposition of some land they had there in Wisconsin, working with a local Indian tribe.
We recently, actually on October 31st, 2025, transferred a piece of land that we held in northern Wisconsin on Trout Lake to the Lac de Flambeau Band of Lake Superior Chippewa Indians. And this was their sacred land initially. We administered a boarding school, a St. Mary's boarding school in northern Wisconsin from 1883 to 1969. So we've been aware of the trauma that has happened through the boarding schools and how that trauma is passed from generation to generation and our part in that. And so we've been working at what we call truth and healing, acknowledging our part and how we can respond differently. When it came to pass that we had a retreat center in northern Wisconsin that we realized we could no longer be the caretakers for, we were looking for another caretaker of the piece of the property. We knew we didn't need market rate return, and there's so much that we cannot do. And we looked for what we could do, and we wanted to be in relationship with a like-minded organization. We had been in contact with the Lac de Flambeau, and we reached out to them. It was a process of back and forth, learning each other's cultures, of not always responding immediately. And in that process, began to develop the relationship. And then when we engaged in, would you like the property? They came back, what are you asking? And that went back and forth several times. And then when we said, we will offer it to you for what we paid for in cash in 1966, which was $30,000, a little over 1% of the market value. And they accepted. And through the process, we began to understand and experience or hear some of what they've experienced all their lives. And part of it was also hearing them say, we only ever get bad publicity. Now we are getting good publicity. And we're no longer guests on this property. We are in the white people's territory. We belong here. And it has really benefited them and the land, they are back on their sacred land. And this is what we could do in this climate. This is what we could do to make a difference and break the trauma.
Wow, there's a lot of complexity in that answer there. And I wonder, David, do these faith-based investors consider themselves to also be impact investors?
Well, in fact, there's always debate over that. Some folks think that impact implies, some kind of returns. John Coleman made the point that, in fact, the purpose and alignment and respect for your employees, all those kinds of things actually add to the bottom line. We think of that as a form of impact alpha, of course. But whether they take the label or not, the faith-based capital out there, it's something like $12 trillion, and even more if you include Islamic finance, is a powerful pot of money that can be aligned with values that can be directed towards human flourishing.
So not just sustainable returns, but perhaps eternal returns?
Yeah, yes, Brian. Generational or long term is a key factor in all kinds of sustainable thinking. So indeed.
Yeah, the afterlife might be the ultimate long-term investment horizon.
Yeah, well, I guess we'll just have to wait and see.
All right, for a roundup and full replay of this week's call on faith-aligned investing, check out ImpactAlpha.com. We'll also have links in our show notes. But that's going to do it for this episode of This Week in Impact. Thank you for joining me today, David.
Thank you, Brian.
And thank you all for listening. This Week in Impact is a production of Impact Alpha and part of the Impact Alpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks as always to our producer extraordinaire, Isaac Silk. For David Bank, I'm Brian Walsh, Managing Director of the impact advisory firm Human Nature. We'll see you next week for more impact.